Lululemon stock has taken a massive hit, down 52% year to date. But I think right now might be the perfect time to buy Lulu stock, and that's what I'm doing in my own portfolio. So I'll tell you why. Lululemon used to be a Wall Street darling. If we look back at their past performance, from about 2017 to their peak in 2023, the stock rose 900%, which would be a 10 times return on your money. So clearly they were doing something right until the stock price just fell off a cliff in about the past 8 months. So what happened that caused such a massive drop, and why am I buying Lululemon stock today? Well, in case you're not aware, Lululemon sells primarily athletic wear, and their main market is the United States, which has been seeing a really tough economic environment lately with high interest rates and consumers being really squeezed for cash and choosing to forego some of these luxury purchases, such as $100 leggings. I know it sounds crazy, but I guarantee you, if you're in the US and you ask any of your female friends what they think of Lululemon products, they're going to have rave reviews. These leggings do come with a steep price tag, but women love them. And it's not just women either. Lululemon also sells workout equipment and athletic wear to men as well, which is an expanding market for the brand. So aside from a weak economy in the United States, Lululemon stock also suffered after the departure of their chief product officer, Sun Cho. Sun Cho was poached by VF Corp and left Lululemon to lead Vans, which honestly, if you ask me, that's a bit of a downgrade. So I bet she was given quite an impressive pay package to make that move. I don't know why anyone would want to leave Lululemon for Vans. I don't feel like anyone thinks Vans are still cool. Sorry if you wear Vans. Stepping up to fill her shoes, no pun intended, is Nikki Neuberger. And if you look at Nikki Neuberger's profile on LinkedIn, she has some impressive accolades. Aside from working at Lululemon for the past almost 5 years, she has a history at Nike before it all went to shit. She worked at Nike for about 14 years, so I think she's a natural person to step up and fill the role. What I'm more interested in is Lululemon's financials, so let's take a look and find out why I'm buying Lululemon today, and why it's actually the #1 position in my portfolio these days. Even though growth is slowing for Lululemon, all of their metrics are still going in the right direction. So they still reported 10% year-over-year revenue growth in the previous quarter. They're buying back their shares, and they're becoming more profitable, with a gross profit and gross margin increase. Even though operating margins did decrease, if we zoom out a bit, operating margins are still up in the past year, where they were about 17.5%, they are now around 22%. Same thing with gross margins in the past year have just been soaring, and net profit margins soaring as well. This is all in a 1-year period, and this is about the period where Lululemon had about 50% of its value shaved off. So it's interesting that we see some profitability improvements at the same time the stock price is getting cheaper and cheaper. To me, that kind of makes my ears perk up, because when I see a company that fundamentally is getting better and better, but their stock price is getting lower and lower, that may signal to me that the stock is becoming cheap. Going back to that comment on the $1 billion increase to their stock repurchase program, Lululemon has been buying back their shares really steadily and quite aggressively. Here's Lululemon's shares outstanding. 10 years ago, Lululemon had about 140 million shares outstanding, and today they only have about 126 million shares outstanding. Now, I know that that's not the biggest decrease, but the thing that I like is that they have been steadily buying back these shares and have not been diluting shareholders with more shares. Why is that? How have they been able to buy back their shares so aggressively? Well, Lululemon management has displayed a lot of prudence. They have a really nice balance sheet, which is not always the easiest thing for a company that has a lot of in-person retail locations, which tend to be quite capital intensive. Lululemon has been able to maintain a really solid balance sheet. They have about $2 billion in cash currently, with just over $2.5 billion in liabilities, but they do have assets of $7 billion. So their balance sheet still looks very healthy, especially when we keep in mind that Lululemon is free cash flow positive, and they have been for quite some time. Here's their history going back to 2009, and every single year they have displayed positive free cash flows with a very strong upward trajectory. So this healthy balance sheet gives Lululemon a lot of options. They can continue to expand, which they're doing internationally. They're expanding into China as well as other countries. And perhaps if growth starts to slow down, they could even acquire an up-and-coming athletic wear brand to add to their own offerings. I'm not sure whether they would want to do this, but I'm just saying that they do have options with such a healthy balance sheet. When we look at revenue growth, like I said, they posted 10% year-over-year revenue growth, which is slowing. However, when we zoom out, we just see that Lululemon has been on a tear lately, growing revenues steadily year over year, and not just revenues, but also net income. Like I said, they're becoming more profitable, so their gross margins and operating margins have been improving, which is really nice to see. So even though sales are slowing down in the US, I'm not worried. I think Lululemon has such a strong brand, and they've displayed this amazing track record of growth previously. I just don't think the brand is going anywhere, especially when we look forward to potential rate cuts in the future. As interest rates fall, consumers will find themselves with a little bit more discretionary income, and demand for products like Lululemon's hopefully should rise in tandem with that. So if we look forward a little bit, I think Lululemon can easily weather the storm with their strong balance sheet and return to growth, especially as they expand outside of the US. And even though this is a premium product that is likely to be hampered by economic conditions in the near term, I don't see the brand going anywhere, and I think they're going to do really, really well in the future. As we can see, the US has even been shrinking as a total percentage of Lululemon's revenues. Here's 2021 on the right and 2023 on the left. We see that America's went from 85% to 79% in those 2 years, with mainland China rising 3% and rest of world also rising 3%. So it's nice that Lululemon is expanding internationally and diversifying their revenue streams, which should help against that country-specific risk that you might see by operating solely in the United States. I love to see that. Turning to Morningstar, this is an investment research website that I tend to like. I don't really put a lot of faith in what analysts have to say, but sometimes it's nice to have somebody do a little bit of your research for you. According to Morningstar, they think Lululemon is a 4-star stock and is trading at about an 18% discount. I think that's being a bit conservative. I think a $300 fair value is on the lower end, but I'm also looking forward quite a bit as I am an investor for the long term. So I'm thinking in the next 5 or so years, we'll see a share price well above this. But again, that's only my guess. When we look at Morningstar's latest report on Lululemon, they say that their immense popularity is an advantage, but competition in North America is heating up. And I agree. And I do think that newer brands, especially new athleisure brands, are going to start to steal Lululemon's market share. However, I think this is priced into the stock and then some. I think people are already fearing the worst and have sold off Lululemon because of this competition. So if competition proves to not be as bad, then I think we'll see a nice little relief rally in the stock. Also, Lululemon is the current leader, and it's much easier for a leader to expand because of economies of scale. One other thing to look at is their valuation metrics. So we see that they have a PE ratio of just under 20, which is quite average for the retail industry. However, I don't believe that Lululemon deserves an average PE. I think that this is a strong brand, and in my mind, it deserves a stronger PE ratio as a result. Also, we need to account for the fact that Lululemon has been growing much more rapidly than the overall retail industry, which tends to grow just slightly above inflation. Lululemon has been growing in the double digits for the past few years. So for those reasons, I think the PE is actually quite low. When we go to my growth stock spreadsheet where I rate stocks on 4 factors, gross margins, annualized revenue, which shows market share, price to annualized sales, and year-over-year revenue growth, we see that Lululemon actually scores very well. So those 4 factors I aggregate to give a total score. The average on my sheet is 12 and Lululemon gets 13. So Lululemon above average stock on my spreadsheet when you look at it from a growth perspective, and a slightly low PE when you look at it from a value perspective. So I think growth investors and value investors can both find something to like in Lululemon stock. Price to annualized sales of 3 is quite low for a stock that is still growing double digits. Now we need to look forward and anticipate that this is going to slow down. However, we can also keep in mind that Lululemon has very strong gross margins, which are improving, and their operating expenses are not too high. They don't have a ton of overhead. It's mostly just SG&A, which is selling, general, and administrative. That's things like staffing and advertising, which are going to be high for any retail company. Lululemon sits at about 61% of their gross margins. That still leaves about 40%. After that, that can begin to go to the bottom line. And finally, when we look at revenue guidance for the year, for 2024, Lululemon expects net revenue to be in the range of $10.7 to $10.8 billion. Even at the low end, that's 11% revenue growth from the previous year where they had $9.6 billion in revenue. So on the low end, Lululemon is still expecting to grow their revenues double digits. We see here representing growth of 11 to 12%. And operating margin for the year is expected to be 23.3%, which is an increase of just about 1%. So I think people are being overly pessimistic on Lululemon. We see a company that's still continuing to execute. And yes, they lost their chief product officer, but they have another one stepping up to fill her place, one with a track record at Nike before Nike went downhill. And we see a company that is expanding internationally, has a strong balance sheet, and is still exhibiting double-digit year-over-year revenue growth at a quite low price to annualized sales of 3 and price to earnings of under 20. Additionally, they're buying back shares and their free cash flows are on the rise. So although there are a lot of risks, the retail and apparel industries are quite fickle and they are subject to trends. I think a lot of these risks are priced into Lululemon stock today, and I'm very happy holding Lululemon, and it is actually, like I said, my top holding after trimming Starbucks yesterday. So those are my thoughts on Lululemon stock. Overall, I am quite bullish, but you should always do your own research before investing into a stock. Like I said, there are a lot of uncertainties, and everybody's investing journey is different, so even though I happen to like the stock, it may not be a fit for you. If you have any questions about Lululemon, please leave them down in the comments below, and if you have any other stocks you'd like me to cover, please also leave them down below. I do my best to answer subscriber suggestions. Lululemon was also a subscriber suggestion, so I'm slowly making my way through those. Thank you guys so much for sticking around to the end of the video. Please hit that like button if you liked it, and please subscribe if you're new. Thank you so much, and have an amazing day.